decide to suspend temporarily the convertibility of the dollar into gold,
which will seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
So I said, what if it does happen? And he says, well, price will solve everything. I said, thanks, give me the gold.
Central banks hold it. Well, silver reserves. So why don't they hold diamonds? Well, it's tradition, long-term tradition. You know, some people still think it's money.
All right, welcome back. I had to figure that out. This is the Junius Maltby channel, and I wanted to do the normal introduction that we typically do with videos in this live. I think we tried it once before. All of you always ask for that intro, so why not put it in with a live? We'll wait. We have to wait for the audience to gather. Seems like there's always a slow delay from the time notifications go out and you guys fill in. Looks like Steve E. throwing down a super chat early in the game. He's betting this is going to be a good video, I guess. Well, thanks for tuning in, Steve. Thanks for the super chat. It's wonderful. Always appreciate you guys, your generosity. It's bad sound. Let's fix the sound. The sound. Did that work? I don't know. Someone says good sound. Someone says bad sound. Well, we'll figure it out. We got some stories pulled up here. A couple things to discuss tonight. It's not going to be a really long live. There is some stuff to read. But I'm going to have to... I've got a program pulled up that's going to hopefully help with the way the life flows. So I'm experimenting with using some of the media in here in the computer to display the slides rather than the actual website method. But we'll see. We'll check it out. But as you can see by the headline, why the U.S. dollar could be the biggest loser of 2021. It always is the loser. I don't mean, it doesn't... That's one thing it's good at. I think every year, even when it's not, it is. It has to fake winning. It's just like sometimes some of the American elections, they have to fake them. So the dollar is good at faking its value. People having, blind faith in it, in this trash currency. I always like to call it the leper with the most fingers left, because all the currencies, all the fiat, unbacked paper, they're all trash. They're all rotting. They're all being inflated, debased, and devalued. The dollar just happens to be the leper with the most fingers left, so it's always fun to call it that. I think I heard that originally. I'll give it credit where credit's due. I believe years ago. I mean, you're talking 10, more than that. Let's see. Oh, goodness. This is dating me. I would say almost 14 or 15 years ago. Max Kaiser referred to the dollar as the leper with the most fingers left. I believe that was who it was. So as you can see, the U.S. dollar, the biggest loser, is more than one story that has this title. In the year ahead, forecast as euro and the yuan and the Norwegian krone seen winning. U.S. dollar forecast to face further widespread declines in 2021. Coronavirus vaccines boosting global economic recovery. Fed weighs on the U.S. dollar as recovery lifts. And then you've got all the other currencies, yen, the krone, all those mentioned. All right. And then I'm picking up, let's see, who's in this chat? Say welcome to Rolf. Rolf Steiner's here. Good to see you, my friend. I got your message. Thank you. Huska Sun, Silver Maple, Incognito, Kane Leggett in the chat. Excellent. Glad you're here. Call the Wild. I'm not going to read all the comments in the chat immediately just because I got to do this video. Let's move down the line here. Let's see. All right. Get the stories pulled up. You probably see the flashing slides as I try this new method of using the whatever it's called, the Mac media. Trying to make this big stack of gold there. Looking at what gold did today, up 26.40. 1866.40, up 1.43%. Silver 24.66, up 40 cents, 1.68%. So yes, precious metals having another good day, as KD says in the channel chat there on the side margin. It's true. Metals had a great day. And like I messaged a few of you in the Patreon realm, for those of you that are patrons in Patreon, I sent you a message, I believe, earlier today. Essentially, we knew this was coming. We knew metals would bounce back. That's what's funny and we're going to get to it in a minute. We're going to read a little article about the metals coming back, and there's a line in there. It's my favorite line in the whole article. So yeah, let's keep going here on the most boring channel on YouTube. Extemporaneous ramblings of a madman, looking at the gold chart. That was you can see today over to the right, and 1866.40 up $26.40. Pretty good volume. But this is, you can see gold was bouncing around. It took that beating the other day. And that's, you remember when the gold bears came out. Don't need to remind all of you, we covered it. Right around here and here, all the gold bears came out. And, or not, this is actually, I'm drawn out to my 5-day chart here. Yeah. So here we go. All throughout the last week or two, we've been just hearing a lot of that bearish sentiment towards gold again. Even the weird myths that they thought major funds were dumping their gold positions to buy Bitcoin, which I disagreed with. We covered that in a video the other night. I just don't think that was the case. And here we go. Let's just get to the article about it, because I want to read my favorite line and go off on it. Gold gained more than 1% to a 2-week high on Monday, bolstered by expectations of fresh stimulus in the United States. We know that's coming. And they're going to do more of it than they're even talking about now, which will devalue and debase and further cause damage to the dollar. Spot gold prices were 1.3% higher at $1860.49 per ounce after rising to their highest level since November 23rd at $1868.25 earlier. U.S. gold futures settled up 1.4% at $1866. The stimulus plan has helped stabilize the gold market, because more money being pumped into the financial system is inflationary, said Kitco Metals senior analyst Jim Wyckoff. Yeah, it's pretty obvious, right? And again, they're going to do more stimulus, and we've already talked about how $1 in $5 over that, 21% of all printed currency that exists in circulation currently right now was printed this year alone. Pretty staggering, pretty surprising. U.S. lawmakers, There we go. Got to wander with the mouse. U.S. lawmakers sought to hammer out an agreement on infusing long-awaited relief through a $908 billion bill. Bullion is considered a hedge against inflation that could result from the large stimulus measures unleashed in 2020, gaining over 22% so far this year. Interesting how they increased the supply of dollars by 21% and gold's up 22%. Does that make some sense to anybody? Also, on investors' radar, the United States imposed sanctions and a travel ban on 14 Chinese officials over their alleged role in Beijing's disqualification of elected opposition legislators in Hong Kong. This is a seasonally strong period for gold prices, and we just went through a capitalization event in which a lot of the weaker hands, this is my favorite line right here, in which a lot of the weaker hands in gold have been shaken out of the market, said Daniel Gali, commodity strategist at TD Securities. That is so important that I'm going to read it again. And if you guys are traders, if you're investors, if here's the deal, if you are even one of the people who's been involved in the crypto world for any length of time, the weaker hands being shaken out is a very important idea to grasp and strategy. And if I have to explain it simply, with my simple words and simple mind, here's what it is. You got a lot of people buying gold, some people buying it because of FOMO or a fad. They don't really understand the asset vehicle or whatever it is that they're purchasing. It doesn't have to be gold, but we're going to use gold in this case. So look at the last several months. It started getting some headlines. It was breaking, new records. And these are the people that they don't own gold. They never really have. And the only reason they're buying it is essentially because it was in the news. There was a positive article somewhere. And of course, like I've always said, if you're reading about it or seeing it on the news, it's too late. The guys that made the money in that trade have already moved on. They've left. They're off to something else now. I'm not saying that's the case with gold exactly, but I'm sure there was a lot of people that old money that was already in there. And by the time it hits the news and all that, these fragile, timid, uneducated, unsavvy, inexperienced gold buyers kind of dip their toes in. They kind of slowly come into the market. And they have such a little understanding of gold that as soon as it takes one of those little corrective dips, you know the ones I'm talking about, like we saw the other day, this one, just the little dips that you see, just the little dips. As soon as it does that, these people panic. They see it coming down. They listen to a couple bearish articles, or they read something, or they tune into a guy like Dent in the Head Harry. They completely flip out, and they dump their position even at a loss if they have to. And then the big guys, or you, the guys that understand what it is gold does, its attributes, its strengths, the ones that are, ideologically in tune with gold, they use that opportunity to take up more and increase their position. And they buy at the loss of those other traders or whoever it was that lost and sold their position. Those are the ones. Those are the weak hands. You got to shake them out. Every once in a while, we got to dip an asset or a thing like gold. Let it drop. You got to shake those weak hands out. Just get them out, flush them out, and let the hardcore strong holders like us keep and maintain our position. Because that's less gold that's out there getting dumped. And the more that happens and cleans it out, the stronger the price is going to get. Because ultimately it'll get to the point where no one's dumping because everyone knows that it's not a good time to sell gold. Bill Spencer in the Super Chat throwing down some Canadian toonies and loonies. Thanks, my friend. I appreciate it, Bill. He's always there with his 3 Canadian bucks and his little chicken giving me a thumbs up on the side. I don't know where you find that emoji, but it's hilarious. I appreciate it. The little chicken with the thumbs up. Thanks. Again, back to the weaker hands. I can tell you right now, Bill Spencer's been in this channel long enough to where I know he's not one of the weak hands. Kane's not. Jeff, most of you guys, Napalm Death for sure. I think you've been in the chat forever. DW. Probably some of the strongest hands in the gold stacking universe. Rolf Steiner's been here forever. I know that. And yeah, you guys are solid. You're not going to dump your gold positions. You're not the weak hands. I don't think anyone who's part of the Junius Multi channel could fall into the category of a weaker-handed gold holder. Yeah, you're the opposite. You're the ones they're trying to shake out. I'll tell you how strong the gold hodlers are here on this channel. They could plunge this market down to $1,000 an ounce. This is how much faith I have in you guys. They could punch it down that far. Just a massive fishing expedition, a deep sea fishing expedition on the charts. And I know for certain not a single one of you in the chat would dump your gold. As a matter of fact, it would hit 1,000 and you'd be out there robbing liquor stores just so you could buy more. Yeah, you guys, I could see it. You're backing your trucks up to the local coin stores and just filling them up by the pallet. Well, gold's recovered more than 5% since slumping to a 5-month low on November 30th. November was also marking bullion's worst month in 4 years. So that's it. They dropped it. They shook the weak hands out. Worst month in 4 years, and then boom, it's up to the stars from here. Of course, there's always going to be little corrections. Pressured by hopes of a vaccine-fueled economy. And that's the other thing about the vaccine-fueled economy. Everyone talks about that. If the economy comes back, you know what happens is the money starts really flowing, the velocity of money, and it's going to go through the system. And then gold will react. That's when you start really seeing those inflation results. And gold will just go up. The price of gold's continued to rise throughout the entire economic recovery, if you recall. Ever since 07-08, gold has done nothing but increase since then. Remember, out of the last 15 years, only 4 years for gold have been down. So back to the dollar discussion. Dollar being the biggest loser. I told you we were going to talk about this. Well, here it is. Let me take a swig of water, though, because I am a little bit dry. I got to stay hydrated, especially in the winter. I knew D-Dub would throw down backing up the truck. I don't know if I learned that term from him or he learned it from me. But he says at 1,000, I'm backing up the truck. Yeah, I could see that. Yes, exactly. At $1,000 an hour, gosh, I remember those days. And I was actually talking to a guy yesterday, just the other day, Paladin Stacker. And I remember when I was young and I got a new job and I got my first paycheck from that new job and I went and bought a quarter ounce of gold, a beautiful quarter ounce of gold for, I think it was $90. $90. $90 for a quarter. Oh, those were the days, huh? And I do have rest. I remember working in construction when I was even younger. That's where you get the lives, the extemporaneous side alleys we take before we read an article. And I've shared this before, but I remember when I'd get paid working construction for my dad. And, oh my goodness, back in Brown's Down era, when England dumped its gold, and I can recall buying gold at under 300 and just thinking, this is, it's expensive, but it's not that bad. And I didn't really have a grasp. I didn't have a concept of where it was going to go. I had the beliefs that I have now. They were just less mature, but I just didn't. I mean, of course, you could say hindsight's 20/20 if you'd only known. But back then, gold floating around between 250 and 3 something and hanging out in the threes for a while. It wasn't a big deal. It was normal. 256, 270, 280, 300. Those were the days. Anyways, the U.S. dollar is on the back foot, and Wall Street doesn't expect that to change anytime soon. This is London, CNN business article here. What's happening? The dollar's weakened by nearly 12% against a basket of top currencies since peaking in March last week. It hit its lowest level since April 2018. The last time the greenback was on the skids like this was 2017. The slump can be explained by a few factors, strategists say. So now we have to both believe that, of course, this article's from fake news CNN, and it's from strategists. So we have to trust that what they're observing, what they're writing, is free of any propaganda or motivation. So I always read this kind of stuff with the highest degree of available skepticism. Really critique this if you can. Faith in the global recovery. So this is what strategists are saying are leading to the slump. When the U.S. and global economy are performing strongly, the dollar, a safe haven currency, tends to weaken. Right now, despite rising plague infections in many parts of the world, investors are putting their confidence in the imminent arrival of safe and effective vaccines, which most people are going to refuse. We can talk about that all day. 50% of the FDNY, the fire department in New York, that's all the boroughs, Queens, Brooklyn, Bronx.
Bronklyn?
That's my made up. What are all the other ones? I got Queens, Brooklyn, Bronx. I had family in New York, so I can usually name them all. I can't remember all of them. Manhattan. What's the other one?
Bronklyn.
Bronklin's my made-up borough. Mrs. Maltby laughs because I made up a borough. It's this made-up borough, and it's the combination of Bronx and Brooklyn, and it's called Bronklyn. And it's this little make-believe borough that I could be from. And sometimes they talk like I'm from Bronklyn. Hey, I'm from Bronklyn. And it's just it's a make-believe borough. Everyone, Bronklyn. I think it's a good place.
You do it to get on my nerves.
I do it to get on nerves and tease her, and I take on this Bronklyn guy because I'm from Bronklyn. Central bank's policy. The Federal Reserve has made it clear it will keep interest rates low and keep printing money for as long as necessary to stimulate the U.S. economy. We've read this. We've covered this. Central bank policy is extremely influential in the direction of the dollar. And the Fed has made it clear for multiple years they're accepting higher inflation, that's another thing, and low interest rates. That drums up faith in the trajectory, I just moved the mouse again, of the recovery, feeding so-called reflation expectations. It's also sending investors elsewhere in search of returns, hitting dollar demand at an all-time high in supply. The upcoming Biden era, of course that should be influential in predicting where the dollar is going to go. Tariffs have contributed to a stronger dollar in recent years, according to Mark Heifel, Chief Investment Officer of UBS Global Wealth Management. Penalties on exports from countries like China raise geopolitical tensions, sending investors scrambling for sure bets. In disputes with countries like China, President-elect Joe Biden is expected to rely more on other tools. That's a positive for global growth and a negative for the dollar. Of course, because he doesn't put America first. We know that. We know that. They don't care. They're talking about music in the chat, Mrs. Malpe. You might, I don't know what, you might be able to see it since you're a little musical expert. This is another article. U.S. dollar, the big loser in the year ahead, forecasts as euro, yuan, Norwegian krone seen winning. Again, this is a very lengthy article, and it's a little bit more technical on why the dollar is going in the direction it's going. So we're going to just touch on some highlights from it. The dollar was down and out for the count against all major currencies Thursday, an ominous sign of what may be to come in the year ahead, according to a range of analyst forecasts, many of which envisage a U.S. currency as the big loser.
I don't think that's how you say that.
I don't know how to say it. Envision? Maybe they spelled it wrong.
I don't know.
Look it up
I'm
on
not
your
the
phone.
right person to ask.
Yeah, because English isn't even your first language. As the big loser from a great global economic recovery in 2021, investors appeared to want no part of the U.S. currency on Thursday, as each of the major dollar exchange rates declined while the dollar index fell further below a key support level that was breached on Tuesday this week. Dollars have been sold and other riskier currencies bought heavily after global economic recovery prospects were bolstered by Britain's approval of the COVID vaccine made by Pfizer and BioNTech, which could indicate that other countries are also likely to approve the vaccine over the coming weeks. The American and German duo are not the only ones to have claimed success in the race for a vaccine, although the prospect of an imminent rollout is a relief for the battered and bruised global economy, as well as a shot in the arm for investor sentiment. No pun intended, I'm sure. It's amazing how much they are relying on this thing, and just, it's pretty bizarre to me. I just can't believe the amount of hype and panic that surrounds this cough, the coof flu. It just blows my mind. The view of U.S. dollar depreciation has certainly become more widespread in the financial markets in recent weeks, with the news of vaccines being potentially rolled out sooner than expected, helping to lift optimism of a strong rebound in global growth, says Derek Halpenny, head of Research Global Markets, EMEA, and International Securities at MUFG. We see compelling reason to expect the krone outperformance next year. It's hoped that availability of a vaccine will make governments less likely to continue hamstringing economies with meddlesome restrictions on activity, thus enabling many to climb out of the crater left behind by the lockdown seen in the early months of 2020 and again in Europe during the final quarter. MUFG forecasts this global recovery will lift oil prices by 27%. So I guess oil would be a great position, it looks like. So it looks like oil would, and again, takes oil to mine gold. And as we've made videos in the past tying those two together, if oil prices rise, gold prices may rise with them. So especially if it's 61 a barrel next year, you could take some good positions in oil, with significant implications for the currencies of oil-producing countries. However, the bank sees the Norway's krone as one of the most likely to benefit from this, in part because of its extreme undervaluation. I'm not a currency trader, so that doesn't really affect me at all. The U.S. dollar could emerge as one of the biggest losers from the global cyclical upturn that we expect to gather pace in 2021 and beyond. In particular, we expect that recovering global growth and trade will lead to increased selling of the U.S. dollar by corporates, says Valentin Marinov, head of foreign exchange strategy at Credit Agricole. The euro should benefit from renewed purchases by Eurozone exporters as trade with the rest of the world picks up. Marinov and the Credit Agricole team say the dollar remains overvalued against most G10 currencies, and that rising spending, as well as mounting budget deficits, will provide investors with an incentive to sell it in exchange for other currencies during the year ahead. The bank looks for the dollar sell-off to be bolstered by global corporate exporters who either sell into the world's largest economy or simply deal in products denominated in the U.S. currency, which is the case for almost all commodity dealers. Okay, and here's another chart of the dollar. So this is the euro US dollar chart right there. And the euro to dollar rate shown in weekly intervals dating back to about May of 2015. Ongoing dollar declines are seen being exacerbated by Federal Reserve monetary policy. We talk about that every day here. Washington's fiscal policy, we talk about that, and a possible change of tone from the White House on U.S. policy towards China. We know that's going to happen. Precipitated by November's election in the ING outlook for 2021. So, who's bearish on the dollar? Show of hands. Show of hands.
I was threatening people. I apologize.
What were you threatening?
I said, I will come to each one of your houses and take a hatchet to all your furniture if you don't like the video. I am not nice.
Oh my goodness, she's crazy. Oh, don't feel threatened by Mrs. Malpe, please, to like the video. If you don't like the video, don't like it. But hey, we do appreciate the thumbs up. Helps with the analytics and the algorithms of the YouTube. So I know you guys are bearish on the dollar. We've talked about this forever, and it's like preaching to the choir here. But this is just further evidence that I think we're going to see the directions in gold go the way we thought they would, and the directions of the dollar to continue in that declining direction that we talk about all the time. It's kind of the inevitable. It's kind of, that's why I feel like sometimes it's the same content, just put a different way with different slides. We always know, essentially, the direction the dollar is going to head ultimately, because fiat always dies, gold always survives. And better put by Voltaire, all fiat currencies ultimately reach their intrinsic value, zero. We know that's ultimately going to happen. The Fed is expected to continue printing new dollars, at least at its current pace, through the next year, before pumping them out into the world's financial markets through its quantitative easing program and variety of other pandemic-related lending programs and stimulus programs and quantitative easing and then everything. They're going to continue doing it. This and a federal funds rate that remains at historic lows between 0 and 0.25%, which might as well be zero, are expected to keep inflation-adjusted bond yields, or so-called real yields, pinned to the floor, and in the process to continue discouraging investors from holding the dollar. So you know what that means. Gold continues to rise because of its relationship to the strength and purchasing power of the dollar. So you know where this is ultimately headed with gold. You know the direction. If you know the direction of the dollar, you know what they're doing to it, the health of it. It's a pretty easy way to understand where you think gold is headed. But again, gold is the ultimate real money. It's just the dollar decay and the rotting value of the dollar that makes gold appear to be more valuable than it once was. It's the stability and its purchasing power. It's the same thing we always address. But that's it for tonight's content. Dollar is the big loser in 2021. Gold jumped 1%, just on its road to recovery, on its way to continue on. It's corrected from that temporary dip we saw recently, the one that got all the bears to come out of hibernation, crawl out of their caves, and vomit out some excuse for why they think gold's going down. We heard from, Dent and Head Harry, we heard from him immediately. It was like day 2. Gold took 2 days of dips, and that guy's out of his cave screaming from the rooftops, gold's going to $1,000 an ounce again. So good for him. I can't wait to prove him wrong. He's convinced that that's going to happen, but we will see. We will see. Now, if that's it for this evening, I do need to prepare a stew. I'm going to make, I'm not saying I'm making it in honor of the British and the UK friends here in the channel, but it is related to your guys' ethnicity. It's what is it? It's a Guinness beef stew. Right?
Huh, you're going to make that tonight.
Yeah, I'm going to go get the stuff to make the Guinness beef stew. I think I need beef broth,
As
though.
you should.
And I got peas, carrots, beef broth, and then you put it in like a flaky dough. It's like I love sharing recipes because it makes me hungry and look forward to them that much more. So it's a beef Guinness stew. And then I bake, there's a crust onto it. So it's kind of like a pot pie, but not really. There's no pie around the base of it. You can put it in a bowl and you bake this crust over the top. And it's fluffy and delicious. Absolutely delicious. Oh, can't wait. So looking forward to that. Making some stew. For the Mrs. Maltby, she loves it. It's one of the meals we shared. Was it during our engagement trip or wedding trip?
Yes, and to answer the question that Tractor Mike had.
What's that?
Yes, we did see, and we are aware of the spark drop.
Oh yeah, we covered that recently. Thanks for spreading that news. Yes, we did. Aware, in place, in possession, ready to go. Alrighty.
I would like some of our Canadian supporters to adopt the Maltby family because I'm getting really agitated that I can't cross the border.
Oh yeah, Mrs. Maltby's getting upset.
I just want like somebody to say
she wants to go on a trip to
family
Canada
over there, and then I have an excuse to go.
You have to be adopted. Is that right?
I don't know. I think somebody has to pretend like they're dying or something.
I don't know. I've always thought we should just invade Canada and liberate it, take it. That's for more of a foreign policy related video in the future. Thanks for tuning in, all of you, though. Appreciate it. I'm going to end the stream, saying goodnight, and I'm going to go make some dinner. So you guys take care.